What's going on, guys? Let's take a look at the overall markets today. Let's kind of do a little bit of a recap on some of the stocks that I like to trade. We're going to start off with the triple Qs, which is a NASDAQ 100. So again, we're coming off of a fantastic bounce off the bottom here, close to this 200-day moving average. You know, the breakout realistically started once we got over this 50-day moving average on the 2nd as well as the 3rd of November. So what I'm starting to notice is a lot of retailers are looking to swing long. A lot of retail traders are looking to get long. But again, you're about 2 weeks late on this move. Okay, so always remember that retail is always the last to kind of know about it. Right now, if you have been playing things off the bounce, you have been swinging stocks, you have been holding, 1, 2, 3 days, the market's been very, very easy. This is a good market cycle that we had the last 2.5, almost 3 weeks coming off this floor. Now, one thing that I do want to kind of keep in mind is that we're coming into a daily level of supply at around 389 on the NASDAQ 100. We have broken out of this supply going all the way back to August. So you can see this channel that we've been in realistically for the last 3.5 months. We've broken out of that. So we've gapped over that. If we do start to lose the lows of today, 384, we've got this gap to fill into the rising 5-day moving average, which is your support around 379, 380. So look for that level to the short side below that 384. Again, if we gap down tomorrow, kind of fill this, if we gap down and we fill the gap and we do come into the support prior to pre-market or right off the bell, look for the bulls to kind of trap those shorts and go back red to green. If we do get a red to green move, you're going to want to wait for that first hour candle. We still have room to kind of move into 389.60s. That would be our supply zone. Some of the stocks that I'm looking at here for tomorrow, just for a little bit of a back test, is going to be Aapl 187.71. Look for that into 185.85. That's your rising 5-day moving average. I'm just going to kind of go through some names that I like to trade and look at. Snow, if we look at SNOW below 162.82, has room down to around 161 and then 160. Keep your eyes on that. Some of the stocks that have been moving outside of the big tech, you have DraftKings, for example, kind of pulling into its support. Don't really see anything there. If we go to SoFi, kind of not doing anything there. If we look at the IWM, which is the Russell 2000 small caps, big inverse hammer got rejected off this 200-day moving average. Look for a confirmation on the IWM small caps below today's lows. That's got room to 177 and then room all the way down to 173. Let's look at something like Boeing. Again, little inverse hammer candle here. Boeing looks very nice for a potential short position tomorrow. Keep your eyes on Boeing below 207.64. Let's go to the S&Ps very quickly and kind of see what's going on with the S&Ps. S&Ps are kind of basing out here above this top linear regression channel. Now we do have this gap to be filled into the rising 5-day moving average at 442. So we do have some room down. Again, I'd like to see what it does off the open, maybe let the first 1 to 2 hours kind of pass by. But again, just want to kind of give you a rundown on the overall markets. Again, we might go into a little bit of a holding pattern, a little bit of a distribution phase where things where things do pull in a little bit into support. Doesn't mean that we're going down to make new lows. It just means we need a little bit of a rest. Also, when the ranges start to contract, that means that your channels on a daily basis, those ATRs are going to start to shrink. So for example, the S&Ps are trading at around $5.25 from high to low. That might shrink to around $4, $3.50. So again, when those ranges start to shrink, you got to think about taking profits a lot sooner. You got to think about more false moves. Again, manage your risk. What I would do, whatever position size that you normally trade right now, cut it in half. Wherever you like to take profits, take it a little bit sooner. That'll kind of protect you going forward, at least the next week or two while we digest this awesome move that we've had, and it'll kind of protect you. Right now, what a lot of traders are going to try to do is, because they've been winning and because they've been growing their accounts, they're going to start to over leverage and they're going to, go all in. Instead of buying 5 contracts, they're going to buy 10. Instead of buying 10, they're going to buy 20. Instead of buying 2, they're going to buy 6. And what's going to happen is you're going to get caught on the wrong side of the move, and it's going to be very detrimental. It's going to ruin your psychology. Again, guys, I'm closing down the lifetime membership. I'm not going to be offering it anymore. The one-time lifetime gold member access to Evolution Traders. it's done, right? So I'm just going to let the night kind of pass by. If nobody decides to join, that'll be it. There's going to be a new way. It's going to go to a monthly membership where access is going to be a lot more limited. I'm getting a lot of bookings for one-on-one calls. I just don't have the time to kind of fit in any more people. So if you do want to kind of take advantage and try to get in on that last effort for that lifetime gold members package where you just pay once and you're a member for life, it'll be up until the morning. Once the morning is done, I'm just going to go ahead and roll it over to the monthly membership. But other than that, I'll see you guys all on the next one. Stay safe out there. Make sure you guys stay profitable and smart.